Hello, I'm Prateek Mehrotra, the Chief Investment Officer at Endowment Wealth Management, an independent registered investment advisor. We named our firm after our 3D Endowment Investment Philosophy. This 3D investment philosophy has been pioneered by university endowments such as Yale, Stanford, Harvard, MIT, etc. Our firm is a co-creator of a national index, the Endowment Index, calculated by NASDAQ OMX, symbol ENDOW. This index replicates the average asset allocation of 800 university endowments and is an objective benchmark that also serves as a beacon for all client portfolios to follow. The index represents over 30,000 underlying global securities replicated through ETFs or exchange-traded funds. In contrast, our competition uses what we see as outdated 2D risk allocations that puts client assets into equity and fixed income buckets. Many portfolios from new clients transitioning to our firm have historically been too concentrated, holding a basket of stocks, or for older retirees have allocated too much to fixed income, leaving them susceptible to concentration and interest rate risks. Our three-dimensional portfolio allocations attempt to broaden your portfolios beyond traditional stocks and bonds to help reduce these and other risks. Our firm's unique 3D endowment investment philosophy is comprised of global equity, global income, and risk-managed asset allocations, which includes real assets, private equity, and hedge funds. The same endowment investment philosophy is then offered to clients across the wealth spectrum of what we call 3 tiers of investment portfolios. The inner core tier is focused on low-cost passive ETF investments with no minimums and replicates the endowment index. This portfolio is fully liquid and can be accessed through our digital offering. The second tier includes the endowment index in the core, supplemented with passive ETF-based models in the outer core, further supplemented with actively managed satellite investments that generally include separately managed accounts. These specific allocations change with market valuations and personal conditions. The third tier is comprised of illiquid and opportunistic investments for accredited and qualified investors. These investments are more complex in nature and provide an opportunity to capture the illiquidity premium while enhancing returns and lowering overall portfolio volatility over the longer term. University endowments must create sustainable returns that can support their academic needs for generations to come. We are looking over the shoulder of 800 university CIOs and their advisors to accumulate their collective wisdom to generate our optimal asset allocation to sustain client portfolios. This also takes the emotion and bias out of investing, which is the primary weakness that many investors have. We measure our clients' portfolio performance by risk-adjusted returns. This measures not just returns, but the amount of volatility or risk taken within the overall portfolio. By reducing volatility, you can improve your net longer-term performance. Simply put, we try to build a portfolio that gives you more returns and less risk so that you can have a smoother, less volatile ride. A key element to our firm is our structure. We are half owned by our employees and half owned by some of our high net worth family clients. When coupled with our team approach, we have a succession plan to help sustain our firm long term. I invite you to learn more about how you can utilize our endowment investment philosophy to manage your family wealth. Call today to arrange your free, no obligation professional conversation. I look forward to personally meeting you and learning about your family and your wealth management needs. Thank you for the opportunity to introduce our 3D endowment investment philosophy, and I look forward to providing you with a free portfolio risk analysis.